the year hasn't all been bad news. I've got to stress that point. Some of us, well, not me, but others, were lucky enough to have invested in Bitcoin, for example. In fact, the digital currencies had a market value upwards of $500 billion, and it shows no sign of slowing down. But what exactly is Bitcoin? And is it too late to jump on the bandwagon? Big question. Well, joining me now is Jonathon Miller, Managing Director of Kraken Australia. Jonathon, good to see you.
Thanks for having me on.
Bitcoin to me, Jonathon, seems just so intangible. I mean, it's a currency, I get that, but good luck going and getting a barbecue chicken and a small coleslaw tonight with it. I mean, what is it exactly? How do you use it?
Look, a lot of people think that Bitcoin's invisible, it's impossible to touch and feel, but I think that, when it comes to assets, a lot of assets that we invest in are very similar to this. We do so through screens. We do so through third parties. And Bitcoin, at the moment, I think the best way to understand it is to think of it kind of like a digital gold. And this Bitcoin, it exists in a digital form. It exists. In counterparties use it. You can trade with it on exchanges the same way you'd trade with gold online, but you wouldn't necessarily. Only a couple of people would have gold sitting in their pocket, or under their couch. Look, what you do, generally speaking, with assets is you trade them digitally, and Bitcoin is the ultimate digital asset.
Okay, so it's an asset. It's something that you can speculate on. But gold's always seen as a safe haven, though. Bitcoin's new. Very rarely are new things considered safe havens, and yet the money's poured in. Why has it come in now for Bitcoin?
Okay, I think the things that have happened in the last couple of years and have been building up for several years prior is firstly the understanding that, number one, Bitcoin is a scarce asset. It's recognised as an asset by governments worldwide, including the Australian Taxation Office, which is unfortunate for some here. But there's worldwide recognition from regulators, but also from institutional investors. Big asset managers in the US, in Australia, have now recognised Bitcoin as being a valuable investment, and they've done so because they understand that this is a scarce digital commodity now. So, for example, you've seen businesses like Fidelity offer custody of Bitcoin. You've seen listed companies in the US, such as MicroStrategy. They've got close to $1 billion on their treasury. So that's on their treasury. The SEC, the stock market in the US, the scrutiny of directors. This is a listed company with all that scrutiny. They've got Bitcoin sitting on their balance sheet now, and that's sitting on there as a hedge because they're scared of the US dollar, and there's a lot of reason for that. So you have a confluence of confidence. You've got people who now understand that this digital asset can be scarce. And finally, you've got the tools around the ecosystem, these trusted third parties, these big asset managers, allowing people to play. So that's what's changed, and that's what's driving some of this price. In addition to that, PayPal have now offered Bitcoin on their platform to their US users. So it's coming from both ends of the stick here, Michael.
Okay, fine. Now, what do we actually know about its creation, though? I mean, you used the analogy, it's a little bit like a digital gold. I'm getting what you mean by that, but of course, gold, you go and you dig, and if you strike it lucky under the ground, well, there it is. And you can sell it, you can melt it, you can turn it into jewellery, whatever. Bitcoin, who's creating it? As you say, it's limited. There's obviously a human brain behind this computer algorithm somewhere, but what do we know about its origins?
Okay, so Bitcoin's quite interesting in that it's actually an open source software. Now to get your head around that, what is happening globally is a whole lot of people contributing their assets to build computers, specialized computers. This is big factory farming, running an algorithm jointly. And they're doing so because they get a reward. This algorithm essentially is the rule set for Bitcoin. It tracks all the transactions. Think of it like chess for the ASX. It's a big ledger. Right, but that ledger is not held by one counterparty. It's not held just by one stock exchange. It's global. You could spin one up yourself, but you might not get it. So what happens is this digital software is what is creating the ledger, and it is what is creating the Bitcoin per se. So that it's a complex idea, but what is happening here is a very open ledger for the system of Bitcoin, and that is something that has never been done before. It was conceived of by several people, we think more than one person, but titled anonymously in a white paper in 2007.
Yeah.
And what we've seen is iterations in the open source community, very, very, very kind of prolific amount of iteration on this original idea into what Bitcoin is today.
Now, it's had a boom and bust history. I mean, all assets do, but it has a rather extraordinary sort of sine cos curve thing going on with its value. But lately, it's up 47% since, I think, the start of December. So at the start of this month, it's up 47%. It's quadrupled in value, Bitcoin, since the start of the year. I would imagine some people would be saying, well, listen, the bust has to come.
We've seen a lot of volatility over the last few years. And you might remember in 2017, there was a big rush to Bitcoin. And that was fueled by a lot of younger investors who, Bitcoin is, until this year, has been very much the domain of the millennial. However, that's changed. And I think what we've seen most recently with the entrant of, listed companies and hedge funds taking on this asset into their balance sheet, they're safe hands there. They've got a longer term view in terms of what they're using this asset for. And much like gold, it's being seen as a hedge. So, yes, if you look at the ins and outs, and volatility can be a very good thing for a day trader. So you can't besmirch it. But that being said, this year, Bitcoin's up 400%. If you look at the last 5 years, it's up 5,000%. So on a long-term view, if you take a long-term view, irrespective of those wild curves, it's upwards and to the right.
Trend, right? Yeah. Well, I wish I'd got on early. Well, I haven't got on. I wish I'd got on to the start. I'd be a wealthy man. I'd be at home enjoying a champagne right now. Hey, before you go, you mentioned all these supercomputers. Just one in this sort of environmentally woke age. I mean, they come with a bit of a carbon footprint, don't they? How does Bitcoin remain trendy, even with some of the millennial fund managers and the like, when it must be pumping out one hell of a footprint?
A lot of the mines that have been developed at the moment are actually being attached to overflow for a lot of the solar projects that are being built. So you see Bitcoin mining plugging in to the renewable space, and same with hydro. In fact, a lot of the mining that goes on, these big rigs, they're actually farms of computers. They're sitting in cold places, and they're sitting near usually some sort of hydro for oversupply. That picture's changing. I think there's more and more of that, but it can't be denied that at the moment there's a lot of energy being used to maintain the system. But at the same time, there's a lot of energy being transmitted here in all sorts of ways that are looking positive for the future of Bitcoin with renewables.